What's good, everybody? Welcome to the closing beat. Happy Tuesday. Hope you're having a good day so far. I'm not having a very good day. It's a rainy day down here in Florida, and the stuff doesn't want to sync up, so I can't show the charts with you today. I'm still going to go through everything. Got a lot to cover today. Hey, if you're one of our customers, you got an email coming out, actually as we speak, to a little study we did today about the markets. The markets have, so far this year, been higher 73% of the days. And so we thought, was that weird? Like we kind of thought about that as a study, went back and sort of studied the whole thing. Go in the dojo, check it out. It's the most recent video uploaded there. It's also in your email to get you there. We're financial advisors here at Jazz Wealth. This is just a stock market show we do to give you the updates, see how things are going in the overall markets. We'll cover as much as we can. Typically, I'll show charts, but I'm stuck today. I can't share the charts, so I'm going to cover as much as I possibly can. If you look at the chart down at the bottom right-hand side of your screen, you're going to see a red dashed line, and I point that out every once in a while to kind of show that that is the markets oscillating between positive and negative on the day. The red dashed line just sort of illustrates yesterday's closing price. And so what you could see today is we just basically went back and forth, ultimately finishing in the red. Not too big of a deal there, but not much, right? If you missed the day, not really that big of a deal. We got a whole bunch of economic news that came out, and basically the good part of the news, you could see right there at 10 o'clock, right there at 11 o'clock-ish, the market started to take off on some of the good news, which was consumer sentiment. Now, you remember going back to Valentine's Day, retail sales came out, worst number retail sales-wise since the financial crisis, the 2008 fall. Today we had housing starts. Housing starts were the lowest that they've been since just before the financial crisis, right? So it was the biggest miss that they've had actually since then. Home prices are dropping, so there's a steady decline in home prices. But the news that helped us today was consumer confidence. So all of this sort of negative stuff, like, man, the economy's slowing down, home prices are getting lower and lower and lower, but yet you guys are confident. You guys are confident in what's going on there. The consumer confidence numbers at 11 o'clock, that's what sort of caused that little spike in the markets there. Highest consumer confidence since 2015. 46% of you feel that jobs are, quote, plentiful. That's higher. Just as an FYI, the highest that number's ever been is 46.8. So 46% of people polled think that there are plenty of jobs out there. 46.8 is the highest that number's ever been. Stock market sentiment. This was interesting to me. 37.1% are comfortable with the overall stock market. If you go back to just December, that number was 28%. People thought the markets were going to head to lower lows, and that's why $44 billion moved out of 401ks. And one other little data point there, 64.3% of those polled expect interest rates to rise this year. So compare that with what traders are actually expecting rates to do. You've got an interesting dynamic between the retail public and the sort of general public, investing public. Okay, let's get on to it. The Dow lower by 33, the S&P lost 2, and the Nasdaq 100 lost 5. All in all, not really that big of a day. You got Caterpillar in the Dow. That was holding back the Dow. You had Home Depot with earnings that also held back. We'll cover that in just a second. So index-wise, if you look at the S&P 500, let me see if this thing worked. Nope, still not there. If you look at the S&P 500, you are still right up against the 2,800 number. You're going to hear that on TV. You're going to see other traders talk about it. 2,800, the overhead resistance that you have there, and continuing to sort of show some want to pull back from there. The Nasdaq is over the 200-day moving average. Not bad, right? It's holding. It's not too bad there, so I'll stick with that. Sector-wise, you got crude oil rallying a little bit today, not recovering all of yesterday's declines. Basically, that's just because OPEC didn't really respond overnight. Yesterday, Trump said, he tweeted out, hey, oil prices are too high. He wanted the prices lower. Everyone was sort of looking to OPEC overnight, Saudi Arabia in general, to see if they would respond. They're basically sticking with the plan. They're cutting production. You got the Venezuela sanctions, the Iranian sanctions starting to weigh on the impact of global supply. However, tomorrow is our crude oil inventory numbers, and analysts pretty much expect for the 6th week in a row there will be an increase in U.S. supply. We'll see. I think it could be kind of interesting to see what happens here with the price of oil. I want to point out financials real quick. Stuck at the 200-day moving average. Tried to show that the other day, how they were stuck at the 200 moving average. They tried to rally again this morning, pulled back off of that. Regional banks, symbol KRE, if you're watching on your own charts there, KRE showing a little bit of an early break in the overall strength there. So just wanted to point that out. Now let's move on to stocks here. You got Home Depot. We'll cover the news today. Home Depot shares were lower on the day, back below the 200-day moving average. Earnings were lower than expected. You came in at $2.09 versus $2.16. They had a charge, a one-time 16-cent charge for one of their brands. That didn't help them all at all there. Revenue was lower than expected, but the company did increase their dividend, so you got a little spike in the dividend if you're holding the stock. They also announced a $15 billion buyback. That's just one of a ton of buybacks announced today. Foot Locker was another one. The Gap was another one. We'll cover that in a second. So that was Home Depot. All in all, trying to still work its way back above the 200-day. It doesn't help some of the home sales numbers that came out today. That also probably weighed on the stock a little bit, but we'll cover that one later. Today's a great day for questions, by the way. If you want me to look at something or you just have a question, happy to go through that because my charts won't show up on your screen there. And I'm a visual guy. I like to show stuff. Anyways, let's move on. So Discovery, the symbol for that is DISCA. There you go. The stock was a little bit lower today. Earnings came in better than expected. Revenue was less than expected. They were really positive on what they plan to do going forward. However, investors were like, what you plan to do going forward, that's a pretty sizable cost as far as growing. So there was, I think, a little discount in the price of the stock for that today. Moving on. Tesla is back in the news today. The shares actually closed pretty much flat on the day. The SEC had asked a federal judge to hold Elon Musk in contempt of court for violating his social media settlement that he had with them. He tweeted out something about the 500,000 cars in production they plan to hit, and Musk defiantly defended his tweet, probably rightfully so, because this was one that was approved by Tesla. It's drama. Bottom line is it's drama. Remember when we talked before about all this, we were saying that investors don't like drama. We like clarity, we like projections, we like assumptions. We don't like drama and uncertainty. And so we're back to this, is there a reason to be uncertain about Tesla or not? Musk could have walked away and just sort of, fought it quietly. Instead, he tweeted out, something's broken with the SEC oversight. He's got bigger ones than I do, I got to tell you. Well, he can afford to, but anyways, that's what it is. So Caterpillar, a little lower on the day, was downgraded by UBS this morning. Price target of 125. If you look at the price of the stock, it's around 135. So they're basically just assuming it heads back into the beginning of the year, the December area lows. Valuation there. So that's Caterpillar. Shake Shack. Oops, spelled it wrong. Shake Shack, the symbol is SHAK if you've never looked it up today. The stock actually ended up a little bit positive. This one's in our mid-cap fund, so it's kind of good to see that earnings beat, revenue beat, same-store sales beat. We talked about this yesterday. The company said that they were able to charge higher prices. That was one of the reasons for their beat there. That's a good thing, right? Shake Shack is not cheap. So that's that one. The Gap, that was the other one, buying back $1 billion worth of shares. Let's take a look real quick while we're here. That seems high to me. The symbol is GPS if you want to look it up. I know they've been buying back a ton of shares. They're buying back 1/10 of their market cap, by the way. 1/10 of their market cap. So that's a big share buyback. That just came out a second ago. Buying back $1 billion worth of shares. That's interesting. Visually it's not interesting, but wow. So the company's valuation, to say it simply, the company's valuation's $10 billion roughly at the moment. They're buying back $1 billion worth of shares. That's putting up some big numbers. Earnings will be on Thursday. We'll just cover it more then. Okay, Palo Alto. It's a special request to review Palo Alto. And you know what happened? Earnings have already come out. Great on earnings. Stock's trading over 250. So Palo Alto beat on earnings, beat on revenue, $1 billion share buyback. They have a metric, what do they call it? Billings. Billings per quarter is what they call it. That was higher by 27% year over year. So you know how every one of these companies has their own little metric, like Netflix has subscribers and Twitter has daily active users and Snapchat and all that. So Palo Alto, it is the quarterly billings, just simple as that. And so up 27%, killing it, right? So everything good on this one. The problem, if you're looking at Palo Alto, the problem is it's trading over 250. So we had a very, very significant run since beginning of the year, very strong, and now it's going to gap higher, at least as of now. It's going to gap higher tomorrow over 250, 252, 253. And so the problem with, Weight Watchers getting crushed. So the problem with that is it's a sellable gap tomorrow. So people that see that tomorrow morning go, yeah, look at this. I own this stock for the year. It's already up like 35%. It's going to gap even higher. That triggers an emotion in people to say, sell that. I wouldn't be surprised if you see it sell on the open tomorrow. You really don't want to see that. It's a little too far, too fast if the stock has, since it's already run up that far. So hopefully that helps. Lastly, we got to cover Smuckers. A name like Smuckers, you got to cover the stock. So SJM is the symbol. We really don't talk about Smuckers. It's a pretty boring stock. Gapped higher today. Great quarter for Smuckers. Reported earnings and gained about 5%. So really, really good for them. Okay. Well, answer any questions if you have any. I'm sorry the charts didn't work. I'll try to get to the bottom of that. We're trying to get fancy around here, and sometimes when you try to do something better, you break everything else. You like Toll Brothers? Yeah, slow uptrend today. New home sales out, pending home sales out tomorrow, I believe. So we'll cover that as well. Zebra. So it's not coming. There it goes. So Zebra, yeah, a little bit, right? It's a fresh breakout. So if you look at a chart of Zebra, you got a sort of consolidation from September to February. You got that fresh breakout there from earnings. Although it's overbought in the short term, there's nothing that says this stock can't just hold right there. Happens all the time where, yes, it gaps higher on earning or shoots higher on earnings, but it's usually, this is the huge difference between this and Palo Alto. So this higher move on earnings comes at a fresh breakout. So you have attracted people that buy strength from earnings. You've attracted people that are fundamental traders. You've now attracted technical traders who like to buy breakouts. That's a whole different animal. Palo Alto already higher and gapping higher. That's sort of call it like an exhaustion gap tomorrow, if that's the case. So Jake, I would hope that it pulled back for you. Yes, I would want to see it pull back. However, you see it all the time. It'll just sit there and wait because nobody's lost any money. Everybody's just sitting there with a profit going, what do you want me to do? So no reason for anybody to sell. Oh, wow. Did I... I'm sorry, I'm behind on these questions here. So Mass Effect is asking about SoFi and the ETF market. There are a ton of these. Fidelity has a bunch of them. TD Ameritrade has a bunch of them. It's a race to zero, basically. These companies all believe that if they can get you in the door with that, they can sell you something else. Not a bad strategy. But the question is, what are you buying? You are not buying the liquid active ETFs. You're buying some random ETF that is sort of up and trying to get going. It's like if I started an ETF, I'd need to get attention. I'd probably make videos. For a while, nobody would trade my ETF until I marketed that thing. So there are already a ton of commission-free ETFs. You don't need to move to a different brokerage firm like SoFi or whatever to trade them. Just know that these are very low volume, low actively traded ETFs. You can already trade them on other platforms if you want and pay zero commission. So I don't know. It's nothing new, really. It's been decades. It's just, I think people are figuring out how to market them. It is extremely hard to break into the ETF market. Yeah, you sound like you get it. Yeah, so let's see here. I'll try to dig through a few more since we're ahead. Apple is definitely an underperformer. So you're asking, what do we think about Apple? It is relative weakness against the overall market. Seems like it's trying to wake up a little here. The problem is with an extended market, tech stocks, chip stocks, all the big tech stocks, all extended, and Apple showing relative weakness, you've got technical traders that'll go, I can't buy the market here because it's a little extended, maybe too risky. The risk to reward's not there. What would I short if I could short? And they all go to the relative weakness stocks, and Apple falls under that category of relative weakness. Not telling you what to do with it. I'm just saying that's how the trader mindset works. I think if the markets pull back here, this is going to be one of the first ones to go. If it doesn't, that's your sign. You may want to start looking to the long side. Yep. Good one though. I mean, it just hasn't really grabbed anybody's attention lately. You just bought $500 of the Fidelity Total Market Index Fund. Why'd you choose that one? Out of all the choices, what made you choose that one? Yeah. STNE. Oops. There we go. I'm not familiar with this name. Obviously very strong, still recovering after the IPO. I'm looking... I mean, it trades plenty of shares. There's a lot of volume there, a couple million shares a day. So I don't know how actively you're trading this one. I always look at things like that to start. I would question if there is... yeah, there's plenty of activity there. I mean, I don't follow these guys, but my general rule as far as helping with buying or selling stocks, it's got to be over 200 days. It hasn't been 200 days yet for a stock. I won't consider either investing in it or talking about it or anything like that. Yep. GE, how'd that do today? So GE yesterday, that was the news. They sold off part of their healthcare division. It helped. It got it to the 200-day moving average. The problem, and we pointed this out yesterday, Ron, the problem is it got it too close to everyone, well, a lot of the analysts' targets. So you have the retail public that looks at these recommendations and goes, oh, if the target's $12 and we're already at $11.30, $11.40, they won't buy it. So you see a lot of profit taking in there, especially from the retail side. And look at from low till yesterday, you had a 50% rally. So if you owned a stock, had a 50% rally, it was gapping higher, meaning it was just going to start higher, and you looked at it and all the analysts, or a lot of them, have price targets around here, wouldn't that trigger a sell for you? So you can kind of understand why it's pulling back. I think it's more than fair that it pulls back here. What you want to see now is that it does nothing. Do nothing for like 3 weeks, maybe a month right here. Just solid, quiet, nothing happening. To me, that'd be a good thing. Yep. Because it's diversified in total market. Okay, yeah, no, that's fine. If you want to be diversified and have that broad market exposure, I have nothing wrong with that. I was just curious. There's a lot to choose from if just having one fund is something you want to focus on. 22, nice. That's a tough one. So is Newell a good price right here? I can't say whether it's a good price or not. I can say that there is zero sign of buyers, right? So Richard, if you're thinking there's a dip, I'd like to buy this, you are literally the only one. Look at what's happened over the last few days there. Not one person has shown up, not, a sizable investor has shown up saying this is my spot to buy. I think you see it give you a little bit more of a discount there, Richard. Captain Morgan just getting started trading. I love it, man. This whole space, I'm going to start doing more videos about it. This whole space is for traders, by the way. So investors, traders, people that just want to come hang out. I'm a long way from being done, but you haven't even, what you guys see here looks like I'm in a basement somewhere. It's a massive warehouse that we're building out studios. I'm hoping not next week, but the week after is when the second set starts for this show. Yeah. So, I'll take some pictures or something or put it on Instagram or I don't know. I'll figure something out. Anyways, so we'll wrap it up there. I'm sorry the charts didn't work today. I haven't looked at Maine, by the way. It just doesn't grab my attention, right? As far as looking at these, unfortunately, you have the same problem everywhere. You've got a lot of this overextension in the short term. So for this category myself, I'd actually, I don't know if I've beaten a dead horse here, but I'd like to see a pullback. Warren Buffett said it the other day. Every investor on TV said it today. The guy that owns the Bucks, not the Tampa Bay Bucks, but the basketball Bucks. Same thing. He was saying, come on, pull back. So I would say the same for this category in this sector. Yeah. Yep. Why you can or cannot say certain things. 3 letters. SEC. They got a bunch of rules. They got a Bible-sized book of rules, and you notice how I'm the only advisor doing shows like this. I'm pushing the envelope. I'm trying to stay on the good side there, but yeah, that's all I have to say. Yeah, that makes sense though. We could do a sort of random video or just cell phone video or something just to explain. Hey, I appreciate you guys watching. I'm sorry things didn't work out chart-wise. I'm going to go back to work, try to figure that out. We'll be back tomorrow. Remember, no closing beat on Friday. And if you're one of our customers, go into the dojo, check out the study. Let me know what you think. It's in the geeky section, by the way, because it's a bit of a geeky study. So we'll talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.